Okay, so Tim, today we are looking at Forex timeframes. So this course it is brought by ReFX Academy. So your mentor, my name is Lee Masheve. So today we're going to look at Forex timeframes. As long as you are into trading, as long as you are into this Forex, there's what we call Forex timeframes. So this is what we're going to discuss. Timeframes. We hear about 1 hour time frame, 2 hours time frames, 4 hours time frame. What are those? This is what we are going to discuss today. Okay? This is what we are going to discuss today. This is what we are going to discuss today. Now, it is very important that we understand about these time frames. Okay? It is very important that we understand about these time frames because they are so important. So Forex time frames, these are found on your charts. Okay? These are found, or you find them on your charts, on your Forex charts. So there is no base time frame. They are all useful for different purposes. So you can't say, no, this time frame it is useless, this time frame it is not important. No, they are all important and they act or they have its own purpose. So when you talk about this time frame, just not to say each and any time frame, it is so important. It has got its own purpose, just like the body. Nothing it is so useless on your body. Okay? Even nails are important. Even the skin itself, it is important. Don't just say, no, only the heart is what is important. No, the liver is important. So it is also with this Forex time frame. They have their own purpose where they will also help you in your trading success. Okay, let us continue. Now, candlestick charts are by far the most common used type of charts. So there are three main types of charts. There's what we call line chart. There's what we call line chart. There's also what we call bar chart. There's what we call now candlestick charts. Now the candlestick chart, this is the most common, which has been accepted as the best way to use. Okay, because the candlestick chart, it is the easiest and it gives more information. It helps you as a trader to understand. It tells you when the candle opens. It tells you when the candle closes. It also shows you some section, okay? Some section where the candles opened, if it took 1 week, if it took what. It also tells you the kind of people are in the market. It also helps you with that, okay? We can talk about it can also show you to say buyers that presented in in blue, rather buyers are represented in green candles. Pardon, buyers are represented in green candles. Sellers are represented in red candles. So it gives you that clear picture. But when you look at a line chart, you not see that. You only see a line. Okay, you only see a line. So the candlestick, it also helps you. That is the best. So for those who are just joining us, you can make sure that you can just put your mic off. So just a minute. Let me just make sure that So if you join, make sure that you just put your mic off so that we do not have disturbances. I don't want echoes. Okay. So let me try to unmute everyone. So for those who are just joining us, we are looking at the candle. We are looking at the time frames. We are looking at the time frames. Okay. We are looking at the time frames. Okay. So now let us continue. So we are talking about, like we have discovered, to say time frames are so important in your trading. They play a good law when it comes to issue of trading. So these time frames, they start from ticks up to months. Sometimes it goes even up to, you can analyze it up to 1 year, you can analyze it up to 3 months. So it begins from ticks to months. Okay. So ticks, these are seconds. You can look at it, you can use it in seconds. Okay, you just look at seconds, how you can analyze, especially if you are trading binary. Okay, especially if you are trading binary. So from seconds, 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 15 minutes, 10 minutes, just like that. 1 hour, 4 hours, also 1 day, 24 hours. So you can analyze the market, you can view how the market using those time frames. Now, let me just make it so clear. Time frames, when, let's say for example, 1 hour time frame, it does not necessarily mean that when you look at 1 hour time frame, it does not necessarily mean that you are seeing what will happen in 1 hour time. No, none of us knows what the future holds. None of us can know what will happen in 1 hour. Okay, so we only use those time frames. They only show us the history. So 1 hour, it does not show what will happen in 1 hour time, but it shows us what the market has been behaving in 1 hour past. Now, using price action, because as a price action trader, we analyze the market by looking at the behaviors, the beliefs, how the behaviors of the traders have been behaving in the past. That is the information that we'll get, which will help us to know how the price will move in the past, how the price will move in the future rather. So by looking at the history, then we determine the future. So when we are studying 1 hour time frame, we are looking at the history in 1 hour past, not what will happen in 1 hour. But we use that information to know, to determine or to predict what will happen in the hour which is coming, or in 4 hours. I hope it is clear. I hope it is clear. These time frames, they don't necessarily mean that when we say 5 minutes time frame, they don't necessarily mean that we are seeing what will happen in 5 minutes time frame. No, it simply shows us what the 5 minute has been happening, what has happened already in 5 minutes. Then when we analyze in 5 minutes that history, when we get that history, it will help us to know what will happen in the coming minutes by looking at the history. Okay, so I hope that point is clear. So all charts you see when trading Forex have a time frame. All the charts that you may see when trading Forex, all the charts that you may see when trading Forex, they have got time frames. Okay, all the charts that you see when you are trading, that you see, they have got time frames. Okay, they have got time frames. So like we have seen on the candlesticks, so what you see on the candlestick, it looks like it is a series of candles on the chart. So the time frame of the chart simply refers to the length of each candle. So the time frame of each chart on the chart, the time frame of the chart, it refers the length of each candle. So if you are looking at 1 hour, it is showing you the length of that candle in 1 hour. If you are looking at 5 minutes, the length of that candle in 5 minutes. Okay, so this is very important. This is very important. So this chart which I've given you just an example of Euro SD. Okay, this is a currency pair. Now this is a chart. I just picked the 1 hour, 1 hour, 1 hour chart. 1 hour chart. So 1 hour chart, it is written sometimes you might see it is written 1 hour chart, but commonly mostly it is not, it is written 1 hour. Okay, some others they can put it hourly chart. Okay, so this is how it looks like. So when you look at it in 1 hour time, you are able to see the candle from this area up to this area. So these are this is the all candles. Now, for the sake of those who are wondering, what are these candles? So these candles are, like I said, this is just a representation of the traders in the market. Okay, the traders in the market. This white candle that you are seeing, it is a representation of buyers. The red candle, it is a representation of sellers. So there are a lot of colors that you can use, but most common color, it is red and green, black and white. Okay, but other traders, they can put their favorite colors, but that should not bother you. But there are 4 types of colors which are common: black and white, black and white, and red and green. Okay, so in this case, the red candle, it is the sellers. The white candle, these are buyers. Okay, so now it is showing you the bigger picture, how the buyers have been behaving in the future, in the bigger picture, in a longer period of time, in 1 hour. The hour which has passed, this is how these people have been behaving. So now, when you look at to my right here, these numbers that you are seeing now, this is the actual price. Now, this price, it moves, it goes up. So at this point, the price was here. The price was here on this candle here. Okay. So this price, it moves, it goes up, it comes down. And the people that are causing this price to move up and down, these are the traders who are represented in the candlestick chart. Okay, white and the red. So I hope you are following. So now the 1 hour time frame, it is giving us the full picture. As you can see, the one which I've circled, the full. But when you're looking at it in 1 minute, in 1 minute, you can only see this part. Okay, if you're looking at the candle in 1 minute time frame, you can only see this part in 1 minute time frame. You can only see this part from here up to here. Okay, that is the only part you can see in 1 minute. If you go in 5 minutes, you can only see, if you go in 5 minute time frame, 5 minute time frame, you can only see from this point, from that point, from the starting point up to this point. If you're looking at it maybe in 30 minutes, if you're looking at it in 30 minutes, you discover that you can see it from the first candle up to this maybe level like that. So each time frame, it gives you a certain picture of the market. The higher the time frame, the bigger picture you may see. The higher the time frame, the bigger picture you may see. The higher the time frame, the bigger picture you may see. Okay, so let us move again. So each of the candles on the 1 hour chart, the one which you have just looked at, we are open for exactly 1 hour. So it opened exactly 1 hour. So the candle, it opens exactly 1 hour. Okay. So the previous candle closes, then immediately a new one opens. That is how it does. Once the previous candle closes, immediately the new candle opens. After an hour passes, another candle opens. Okay, that is how it goes. So the new candle moves about up and down for an hour. That is a principle. A new candle, it will go up, it will go up, it will go up, and it will come down again for an hour. I hope you are following this principle. Okay, a new candle moves about, it will go up, it will also come down for how many hours? 1 hour. Okay, the candle closes and the new one opens immediately. And what will happen is that it will repeat the same process. It will go up 1 hour, it will come down another 1 hour. Okay, just like that. So you can have the charts as low as the ticks. Okay, ticks, which is a second. Okay, basically 1 seconds. Okay, charts. You can get a new candle every second. Okay, every second it goes, it comes, just like that. It goes, it comes, it goes, it comes, it goes, it comes, it goes, it comes for second. 1 hour, it goes up. 1 hour, it comes back. Another hour, it closes, another candle opens. It repeats the same process as long as we are looking at it in 1 hour time frame. As long as we are looking at it in 1 hour time frame. Okay, so it is very important that you get to understand that. So let us make sure that those who are just joining, we put our mics off. We put our mics off. Okay, so it is very important that we get to understand that. So time frame, these time frames, chart time frames or time frames, they are so important. These time frames which are found on every chart. Whether you are looking at a candlestick chart, the time frames, you find them. Whether you are looking at it at a bar chart, these time frames, you find them. Okay, so this is what you need to bear in mind. Now let us continue. So you can also get charts as high as monthly charts. You can look at the chart, the time frame as high as monthly chart. So in which a candle opens at the start of a month. At the very start of the month, the candle opens and it closes at the end of the month. So each of those candles could represent an entire month, the whole month. Okay, that particular candle, you can see it represents the whole month. So if it is a big green candle, it simply means that the whole month, the buyers were in control. You can simply say that, okay, this market, the buyers, the whole month, the buyers were in control by looking at the candle and the color of that candle. If it is red, you could tell to say the whole month, the red, the bullish, the bears, they were in control, are the sellers. Okay, so traders use the whole range of time frame for their tradings. So if you are scalping, automatically you go for small time frame from 30 minutes up to 1 minute. For those who are there traders who are holding maybe 24 hours the whole day, they will go for bigger time frame. They can go for 24 hours. For those who are holding the whole month, they will target the 1 month candle, 1 month candle or 1 month time frame. I hope you are following. So this is where now we end. This is where we end on the issue of time frame. So I hope you have gotten what we have said. So for the sake of repeating, so if you had missed anything, or you joined in late, I'm now doing a summary. So today we were looking at the Forex time frames. Forex time frames. And we discovered that Forex time frames are found on your charts. It could be the candlestick chart, it could be the bar chart, it could be the line chart. Whatsoever candlestick that you might be using, you still find these time frames. Now, these time frames, there is no best way time frames. Each time frame, it is based on its own, depending on the purpose or you want to go for. For someone who's scalping, they will have their own best time frames. For those who are going for bigger time frames, who are holding, they have their own best time frame. But you can't say that this is not useful, this is not. Oh, they are important, just like how the body's part, organs are important. You can't just say, no, the heart is what is important. Only no. You can't eat using the heart. You need to use the mouth, and you can't chew using the tongue. You need to use the teeth. So anything, they are all parts of your body are so important. Same, it applies with the time frames. So if you want to go, you want to scalp, you use smaller time frames. If you want to go, you want to hold, you use bigger time frames. So each time frames, they are so important, useful for different purpose to different traders. Okay. Now we have also discovered to say candlestick patterns or candlestick chart. Candlestick chart time or candlestick chart, it is the most widely commonly used type of a chart, okay, because it gives a lot of what abundance of information which will help you as a trader to get full information, and it is easy to read. Then we also discovered to say on the time frames you can start as well as ticks. So ticks, these are just the seconds, okay? So from seconds to months, okay? From second to month, you say seconds. You can also you can see the time frame of seconds. You can see time frame of 1 hour, 1 minute. You can see time frame of 5 minutes, 2 minutes, 3 minutes, 4 minutes, 10 minutes, 11 minutes, 4 hour, 1 hour, 1 month, the day. Okay, so it depends on that. So you need also to understand that these time frames, okay, these time frames on the chart, they simply refers to the length of each candle. It measures the length of each candle. Okay, so those time frames, they are only measuring the length of each candle. That candle, it is a behavior of those traders, how they have been behaving in that particular period. Okay, because see, those candles are just a representation of buyers and sellers. This is just a graph to show you what is happening in the market. And this market, the price, it is moved by buyers and sellers who are represented in form of the candlesticks. Okay, so we looked at 1 hour to say this is an example of 1 hour, and each time frame 1 hour, it is showing us a good picture of it. So this picture, as you can see, this time frame, as you can see, you can simply say that you can simply tell that this is ranging. The market is ranging. So those drawings that we are drawing here, this is just to show you to say, if you are looking at it in 1 hour time frame, you are able to see the overall, that blue line, the blue circled line, it shows us how wide you can see the market. But if you are looking at it in 1 minute time frame, you can only see that yellow part which I've shaded. That is the only point you can see. If you are looking at it in 5 minutes, you can see it in that grayish line. Okay, if you're looking at it in 30 minutes, you can only see it in red line, that red circled line. So each time frame, it shows you a kind of a picture. Small time frame, you can only see part of it. You can't see the entire candle or the entire picture of the market. So each time frame, it is very important. We also now analyze, and we also looked at these important points to say each candle opens, for example, in 1 hour. The example that we looked, it means that that candle specific, it opens exactly in 1 hour. Now, what happens if that candle opens? The previous candle closes and instantly a new one candle opens. Once the previous candle closes, instantly a new candle opens. Okay, so if the candle that closed, it was let's say a green candle, a red candle automatically open. Or if it is they are still in power, the green candle open, another green candle will also open. So the new candle moves about, it will go up and down for 1 hour. So if you're looking at it in 1 hour, it simply means that the candle, it will go up 1 hour, it will come down again another 1 hour. Okay, for up and down for an hour. Okay, up and down for an hour, up and down for an hour, up and down for an hour. Okay, so the candle closes and the new one opens instant, and it repeats the same process again. Okay, so this is what you need to be noticing. So basically, as we are saying, is that these candles, you can see them as well as ticks. Okay, basically those ticks are just seconds. Okay, on the chart, you can get a new candle every second. You can also get a new candle, or you can also get a new candle as high as monthly charts when you look at it on the monthly chart. Also, we also discover that to say once a candle opens, this simply means the whole month. When you're looking at it in 1 month, in 1 month time frame, simply means that a candle opens at a start of 1 month and it closes at the end. Okay, so each of those candles could represent the entire month, the whole month. You are looking at it, it means that the whole month, this is how the candle was behaving. Okay, so this is where we end. This is where we end. So this is where we end. So this is all about the Forex time frames. This is all about the Forex time frame. Make sure that you go through the lessons over and over and over until you understand. Until you do what? Until you understand. So if what I've taught you, it is you have gotten 1 or 2, or you have understood what I've from teaching, can I see some 5? Can you just type 5 in the chat box? 5 in the chat box. 5 in the chat box. You can just type 5 in the chat box whenever you see this video, either on YouTube, just type 5 in the chat box, or you are seeing it on Zoom meeting, just type 5 in the chat box. Whether you are seeing it on Facebook, type 5 in the chat box. Whether you are seeing it on TikTok, just type 5 in the chat box. In the chat box. In the chat box. In the chat box. Yeah, wonderful. I can see people typing there, which is good. So this is where we end. This is where we end.